So this is a sum of October, November 22, sorry, 24, paper 2 to 22. And it's related to incomplete records. Now, one thing over here that you should notice whenever you get a sum like this, what you're going to see is you're going to see what you are asked to do. Okay? If you see over here, what are you asked to prepare? You are asked to prepare your statement of profit and loss, and we will still scroll through. I have places for working if you see over here. Yeah? If you have place for working, that means whatever working you are showing, it should be shown over here, and minimum amount should go to your income statement. Okay. Anything else that I'm asked to prepare? This is, I have to show the accounting concept that is used in some adjustments. Okay. And then there is theory. That means there is no statement of financial position what I was looking at. So one thing is very clear that whatever markings I have to do it in the for income statement, keeping in mind my income statement. I hope you're with me. Okay. We read the question. Ahmed is a sole trader. He does not maintain full accounting records. This is something that is going to tell us this question belongs to incomplete records. And he has given me following information. Fine. Payments and receipts. Can you tell me what will this give me? Payments can show me expenses. Payments can show me purchases. Which purchases? Cash purchases. Okay. Receipts. Receipts can show me other income. It can show me cash sales. Very well. So I will keep on doing the marking. Carriage outward. Other expenses. If it was carriage inwards, then it would be part of cost of sales. Please do the markings along with me. Cash sales. Where does cash sales go? Cash sales is a part of revenue. Will I directly put it in the revenue, or will I try to find out my credit sales as well? Okay, fine. When I see over here, you see they have told us that the working is for what? Revenue, cost of sales, rent, electricity charges, motor expenses, and depreciation. So keep that in mind. Carriage outward is other expenses, and cash sales would be a part of the revenue. So I am writing cash sales and I'm writing 5,200. I have put as I saw in my working. Electricity charges paid. Can I put it directly in my working? Fatima, can I put it directly in my working?
Yeah.
It's other expenses. General expenses paid. This is also going to be other expenses. Motor expenses paid is other expenses. And I'm going to put this motor expenses 4250 in my working as well. I have received the money from credit customers. In income statement, one thing is standard. Sales are two types. Which two types? Cash and credit. Cash sales you get from the bank account. Credit sales you would get it from your SLCA. Okay, so just keep this in mind. This might help us to find the credit sales. Okay, rent paid, other expenses, and because I've been given a place to do the workings, I'm going to put it over here. I hope you're with me. All the purchases are on credit. That means to find my purchases, I will have to make which account? So PLCA. It always has which balance? Below that, credit purchases, and this is what I will be looking to find out. I've put it as a balancing figure so that even I am clear what is to be done. All purchases are made on credit. Okay? Along with this, I'm going to put a marking on whatever information I've already used. I've used 1920. I've used general expenses, no, right? Motor expenses has been used? Yes. Payment to credit suppliers, where will I put it? PLCA, which side? 61 to 40. Should I also make an SLCA? I'm just writing, I don't know whether I want credit sales or no. It's balance begin down, credit sales, everything else on the other side. Okay, I use my rent paid, I used it. So I know that there is just three information that is not used. Correct? Rest all I have incorporated. I'm going ahead. All purchases are on credit. For this, I know that I have to find my credit purchases. I have to make my PLCA account. I hope you are with me. Okay. Assets and liabilities have this information. Come on. My first information is 8% bank loan. At the beginning of the year, there was no bank loan. Now I have bank loan. What do I do? Whenever there is a percentage sign, interest is a hidden adjustment. This you should remember. Whenever there is a percentage sign, interest is a hidden adjustment. And when you are going to calculate the interest, you would always see if it is for the whole year or you have taken it in the middle of the year. Please go and check whether it is for the whole year or it's been taken in the middle of the year. Bank loan, bank loan, bank loan, bank loan, bank loan. I got bank loan. Bank loan is taken on 1st April 2024. So bank loan, interest. Can you please help me? How will it be calculated? 1st April 2024. Year is ending on 30th of June. 1st April 2024. Year is
Yes.
ending on 30th of June. So April, May, and June. 3,000 into 8% into 3 by 12. Interest is 60%. Sorry, interest is 60. Since I have found this out and I know that there would be nothing related to bank interest more, I'm going to my income statement, the statement of profit or loss that I'm supposed to make, and I will use the method of estimation. What is method of estimation? I know I will have my revenue, which I am yet to calculate. Are you all with me? I will say I have to deduct the cost of sales. Is there any information about inventory? Yes. Purchases should be a part. That means the cost of sales is going to be there. So I am just writing opening inventory, add purchases minus the closing inventory. I'm going to make a two column one. So I would say my main revenue will come over here. My main cost of sales would come over here that I will deduct. Okay. So I am going to get gross profit. Are you with me? Add other income. I'm leaving some place because I've not read the entire question. Less other expenses. So I'm putting minus other expenses. And the first expenses that I calculated was what? Bank interests. 60. I hope you're with me. Why did I write this first was because I read through all the adjustments to see if there was anything related to interest. This is done. Can I do the same thing for general expenses? Or first I go through everything again? I want to finish this general expenses also. So I'm seeing general expense, general expense, general expense. Is there anything that is related to general expense? No. So I can finish this general expense also. Write it. Rest all information is in bits and pieces right now for me. Yeah? I hope you're with me. Come on. Allowance for irrecoverable debts. Can you tell me what is this? Provision for doubtful debts. This is PDD. Old or new? Old. Whenever there is PDD, we always remember something. Old minus new. If the answer is positive, it's other income. If the answer is negative, it is other expenses. Do you recall this? Old minus new. Initially, I had something that was 1055. Let's see if I have any new PDD. Check if is there any new PDD for us. I'm asking you to check inventory, rent, trade payable, trade receivables, inventory, goods for own use, bad debts. You can see there is bad debts of how much? 300. You see, for this allowance, they have said this is a question mark. That means they want us to find the new allowance. Can you try to find the new allowance? I'm waiting for you. What I'm looking is to find the allowance for bad debts. Okay? I have the old PDD as 1055. I have the new bad debts given to me as 300, and they are telling us that the allowance for irrecoverable debts is the same as in previous year. That means percentage of PDD is same as previous year. Are you with me? Provision for doubtful debts is always calculated as a percentage of your NTR. What was NTR? Net trade receivables. How do I get the net trade receivables? I say my trade receivable minus the bad debts, the new bad debts, is going to give me my net trade receivables. This I'm calculating for the new one. My new trade receivables is 18,500. My new bad debts is 300. How do I know this is my new bad debts? Because it is given in the adjustment. If you still struggle with PDD, you can go and watch in your IGCSE PDD. There are only 3 videos for it. So your net trade receivable is how much? 18,200. I would say minus new PDD. I will get my trade receivables that's going to go in the balance sheet that is going to go in my statement of financial position. Now, my struggle over here is new PDD is a percentage of NTR. Yeah? Fatima, are you with me?
Mm, yes, miss.
But I don't know the percentage. Do I know, Mahar? But they are telling me percentage is the same as the previous year. Okay. So I know my previous PDD was how much? Old PDD was 1055. Old trade receivables was 21,100. Yeah. So
Yeah.
old percentage would be how much? PDD divided by trade receivables into 100. So old PDD divided by trade receivable into 100. I get this percentage as 5%. I hope you're with me. Now new PDD is 5% of NTR. That means it is 5% of 18,200. 5% of 18,200 gives me 910. I hope you're with me. Where will this go? This will not go anywhere. Old will not go anywhere. You would say old minus new. Old PDD is 1055. New is 910. Old minus new is how much? 145. If old minus new is positive, then it is other income. If old minus new is negative, then it is other expenses. So 145 is positive, it is other income. This becomes my working note for the PDD. I will immediately go and record it in other income. It's a decrease in, they've used the word allowances for irrecoverable debts. So I will also write this decrease in allowances of PDD. How much? 145? Is there anything else that I have to record with related to this adjustment? Will new bad debts not come? It's in the adjustment. It's in the adjustment. It's new bad debts. Will it come or will it not come? It will come as other expenses. Go and write it. I hope you're with me. With this, I complete adjustment number 6. I complete adjustment number 7. I had already completed adjustment number 8. I hope you're with me, Fatima.
Yes, miss.
If you are facing any issues with PDD, go to IGCSE PDD. It will not take you more than 40 minutes. There are some small adjustments that I have given related to the same thing that I have done right now. It's
Okay.
just old minus new. If it is positive, other income. If it is negative, other expenses. Old will not come anywhere. New will not come anywhere. New PDD is calculated as a percentage of NTR. NTR is trade receivables minus new bad debts. NTR calculated as a percentage. New bad debts will be other expenses, and new PDD, it depends upon increase or decrease. So this is done now. I'm going ahead. Allowances is over. I'm putting a strike through. It is very important to mark what is done so that you do not miss out on any information. Come on, this inventory. Where will it go? I am making a working for cost of sales. Yeah. So I'm writing opening inventory over here. I hope you're with me.
Yes, miss.
Should I strike this off? Yeah. Other payables. Payable, payable yet to be paid. It is outstanding. Outstanding is outstanding is added. So I need to add rent accrued and electricity accrued. So adding 600 to rent. I'm adding 130 to rent. Now I've done a mistake over here. Can you tell me what mistake I've done? So the mistake that I did over here is outstanding, accrued. Outstanding is always added, correct? But what
Yeah.
I add is of the current year. Yeah? What I add is of
Yeah.
the current year. So current year is 2024. So of the current year it is added, of the previous year it is subtracted. So the mistake that I did is I added of the last year. Yeah? Come on. For rent, how much should be added? There is no outstanding of the current year, so nothing but of the previous year should be subtracted. Are you with me? Same for electricity. For the previous year should be subtracted and for the current year should be added. With this, I complete this part. Are you with me? Other receivables, prepaid rent. What should I do for prepaid? What should I do for prepaid? Subtract. So I'm going to subtract 1,800 because it is for the current year. With this, I complete this adjustment. Now I have trade payables opening and closing balance. Come on, tell me where should I put it? Opening balance I am putting in the PLCA, opening and closing. Trade payables have a credit balance, trade receivables have a debit balance. And for trade receivable, opening and closing. I hope you're with me.
Yes, miss.
Okay. Should I write something else also in the SLCA? I remember having bad debts. New bad debts 300. So I will write my bad debts in the SLCA. I hope you're with me. Now when I'm doing, I see I'm only left with 1, 2 and 3 adjustments. Come on. Goods for own use. Minus from purchases, or I can say I will minus from cost of sales. So I'm minusing goods for own use. 420. Now what I'm left with is adjustment number 1 and adjustment number 4 and adjustment number 9. I hope you're with me. Fatima,
Yes, miss.
come on. Let's read it. On 30th June 2024, that means on the last date, my inventory was valued at 15,880. Okay. That means my closing inventory was valued at 15,880. What is the rule for valuation of inventory? It should be valued at cost or NRV, whichever is lower. So this has including a damaged inventory of 960. So I have 15,880, which includes a damaged inventory and it includes normal inventory. Damaged inventory is for how much? Normal inventory is for how much? 14,920. Yeah, it should be valued at costs or NRV, whichever is lower. Damage inventory of 960 can be sold for 1,100. That means the net realizable value is 1,100 if I did repairs of 340. 1 minute, I'm reading. Okay, if I did the repairs of 340. So this can be sold for 1,100 if there was a repairs of 340. So if there is any NRV, you would do the estimated selling price minus all the expenses that you are going to incur to sell the product. So you are going to do minus the selling expenses. Selling expenses is 340. So my NRV becomes 1,100 minus 340. So this is 760. So cost of this damage inventory is 960. NRV is 760. I'm going to value it at a lower price. So lower price is how much? 760. And this inventory is going to be valued at 14,920. Okay. So what would be my total value of closing inventory? It would be 760 plus 14,920, 15,680. I take it to my cost of sales, opening inventory plus purchases. I don't have my purchases minus closing inventory 15,680. I'm giving you some time to digest and write the workings for it. I'll pause the video. Last adjustment that is left is Ahmed started the business on 1st July 2022. So he started it in 2022. We are in the year 2024. I hope you're with me. He purchased a motor vehicle of 24,000. So he purchased a motor vehicle for 24,000, fixtures for 3,200, and no other assets has been purchased on that date. So what do I do? Okay, let's see if some information is missing. Is any information missing? What? Okay, I got it. Motor vehicle was purchased for 24,000. Fixtures and fittings were purchased for 3,200. No other non-current assets have been purchased on that date. They've not given us any rate of depreciation or anything as such. Let me check the original question and come. Where is it? Where? Okay, tell me the two adjustments. Hmm. Okay, so there is a depreciation policy on fixtures and fitting. It is 10% per annum using the straight line method. So here I can directly calculate the 10%, which would make it how much? 320. Yeah, 3,200 into 10%. 320 is depreciation on fixtures. Yes. Okay. Motor vehicle. It's reducing balance method. That means I've used it for 2022. Yes. So first I will minus for 2022 20%. So it's becoming 24,000 into 20%, 4,800. So the net book value is how much? 19,200. I hope you're with me. Then I do depreciation for 2023, 20% of the net book value. So 3,840. What I get is 15,360 net book value. Now my year is ending in 2024. That means I need this depreciation. Depreciation for 2024 at 20%. I hope you're with me. So 15,360 into 20% is 3,072. This is the depreciation that I need. He took it on 1st July to June. No, I need this depreciation actually. Yeah, I need this depreciation. I don't need this depreciation. My year is ending on 2024. So July 22 to June 23 would be my first year, and second year would be July 23 to June 24. I need this depreciation. So depreciation on motor vehicles would be 3,840. I hope you're with me. Are you with me? Yeah. So total depreciation is how much? 3,840 plus 320. So it's 4,160. Where will I put it? Depreciation 4,160. Done. Now I start recording my things. Cash sales. I need first revenue, right? I have cash sales. I need to find credit sales. Can I find my credit sales? How? Come on, tell me. Balance the SLCA. So I have 102 600 plus 300 plus 18,500. So this becomes 121 400 minus 21 100. So my credit sales is 100 300. 100 300. They've not incorporated the new bad debts. New bad debts is not incorporated in the SLCA. They have not done it. Okay. So give me my total revenue. 5,200 plus 100, 300, 105, 500. I hope you're with me. I will remove the new bad debts right now and I'll make this 105, 200. Let me come back to it and check later. Revenue is 105, 200. Are you with me? Let's go to the cost of sales. We've done all the adjustments related to cost of sales. Purchases is not there. Can we find purchases? So it is 61, 240. Actually, I want you to try it yourself, closing everything. Come on, I'll wait for you all. So after we calculated everything, both of you, can you tell me the total rent that we have now? Rent expenses. So it's coming up to $14,400. Electricity is coming up to $18.80. Motor expenses. What is this 190? What is this 190? Can you please tell me? And depreciation was 4160. So for motor vehicles, we had 3840. And for fittings, it was 320. Can you tell me what was this 190? And our credit purchases we found out using the PLCA, so which was 58,740. So I would find my cost of sales over here in the working note and I'll write the main answer on top. Okay. So my cost of sales is coming up to 55,280. I hope you're with me. There was one thing that we did a mistake over here was that in our SLCA we incorporated the new bad debt. Okay. We are not supposed to incorporate the new bad debts in the SLCA. Okay. Now when we are making our statement, I hope you are with me. Are you with me? Mahat, revenue, cost of sales would be a working note number one. So I'm removing all of this because I already showed in my working. So my net cost of sales comes up to 55 to 80. The reason why I did this was because I did not incorporate the goods for own use. So I had to cut and do everything. So rather I showed it as working note 1. Now I'm getting my gross profit as 49,920. I hope you're with me. Then we start with our expenses again, checking each and everything. Carriage outwards did not have any adjustment, did it? So I'll write carriage outward. How about electricity? Electricity, general expenses, and motor expenses. Three things we found over here: electricity, rent, motor expenses, general expenses we already wrote. Yeah? Can you give me electricity how much? So it's in the working note. So I'm writing working note. Then I have rent, 14,400, even that is there in the working note. And I have motor expenses. You found out what was that 194? What is it? So motor expenses had motor insurance. And this was ending up to so 31st August. So 1440 was paid for 12 months and it was paid up till August. So July and August, 2 months was prepaid. Yeah. 1440 divided by 12. It's coming 120. 1440 it is. 1140. So 1140 divided by 12 into 2. 190. This was prepaid. What else now? We did this inventory, rent, trade payables, trade receivable. This is done. Goods for own use done. New bad debts done. Interest done. There's nothing else left, right? So our total expenses is 29,500 and I'm getting profit for the year as profit for the year as 2565. Now we have this part. We have to explain with reference to accounting concepts. Why adjustment 5611 were to be made in the financial statements. 5. Goods for own use. What do we do for goods for own use? You minus from cost of sales. Why do you minus from cost of sales? Okay. So the concept is the business entity concept. So we say that the owner has taken the goods purchase for his own use. So it is not a business expenditure, and that is why we have to remove it from the business expenditure, and that's the reason we remove it from the cost of sales. I hope you are with me. Now, bad debts, irrecoverable debts. Is it a certain loss or an uncertain loss? Certain loss. So, any loss that you anticipate for the future, or you have already known that it is a loss, you remove it from here, right? Following the law of prudence because you do not want to overstate your profits and your current assets. What does the prudence concept say, Mahal? Okay. Motor insurance was 190, which was deducted. Why? What does the matching concept say? You match the expense for the year with the income for the year to get the profit for the year. Very good. Now this is an advice question. Haris, please read. Okay. Now over here, Ahmed has opportunity to buy a larger premises, and he does not have money, so he can either take a loan or he can ask somebody else to come into the business. Which option should he choose? Advantages and disadvantages of both. If he takes a loan, it has to be repaid with interest. Interest would reduce the profit. There are too many formalities involved. Okay, bank might give you, they might not give you. Liabilities will increase. If he has somebody else, okay, okay. What is your decision? What he should do? Why? Because he might not want to dilute ownership. He might be very confident about his ideas and proposals. So with this, we complete October November 24 paper 22.